Okay, so today's going to be a little different. I'm going to talk about the ORB strategy, ORB, which is an opening range breakout. Trading this strategy, you're looking at the opening of a session of the market. And in this case, we're looking at Nasdaq. We're looking at the first 15 minutes of the U.S. stock market open. So it is 9:45 right now. So we're taking the high and the low between 9:30 and 9:45. You're marking the high and low and waiting for a breakout. So I've seen people use the first 5 minutes. I've seen people use the first hour, the first 15 minutes. Those seem to be, I haven't really seen too many people use the first half hour, but it's going to be based on what you want to do. So there's different ways and techniques to trade it, and we're going to look at that right now. We do have a thread in the Discord that some people that are trading this strategy have posted in. And I know Mark's made an indicator out there for that strategy. So there's several indicators for it. And I'm sure he can help you with that if you have any questions on it. And I believe he's posted the script code out there in that Discord thread. So what we're doing is I'm looking at the first 15 minutes here, and we're going to see how it breaks out. Now, the indicator I have on here does post buy and sell signals. Basically, from what I've seen, is it looks back and it will mark a buyer sell signal based on a breakout and a pullback. So you'll see right here, it had a buy signal in here. So basically a breakout and a pullback. It doesn't seem to give multiple signals because over here there was a breakout as well. So it broke through the top and pulled back a little. Now, I've also seen some people put a buffer. And what I mean by that is they come up here and they will have a buffer up above the high and a buffer down below the low. And if it breaks out, they look for it. They will not trade it till it breaks through the buffer. If it breaks through the buffer, they're in long. If it bounces off the buffer and comes back down, such as over here, where it breaks back out, hits the buffer and comes back down, well, then they're going to buy in there. Okay. Stop loss is going to be up to your own risk tolerance, whether you use the opposite side of the high-low or box. Basically, you're looking at a box out here, a high-low. If you use the opposite side for your stop loss, or if you use the middle of that range. So one thing to be careful, as you can see right here, I got to point out there's some wicks that pop through the bottom. So just be careful because sometimes you'll get wicked out. So right now, that's what we're going to wait on. We're going to wait and see what happens. I'm not too familiar with the complete indicator. We do have a, as you can see, we have a 4-hour support resistance level up here that has come into play with the market open. So we had the market open here at 9:30. It popped to that 4-hour zone, that 4-hour support resistance level, and that's off our 4-hour chart. So that's come in play right now to where it keeps hitting that. So would I think it's going to break through the 4-hour and just run? No, it's not going to break that easily. It hit it, bounced back, came down, made a low, basically from over here, testing this low, and then pulled back up and hit that high again. So right now we're going through low. So basically you're waiting on a breakout is what we're waiting on, okay? I'll go ahead, and I don't have the other chart indicator up. We're only going to use this, solely this one. If I had the power trade indicator open, we would actually, of course, see the buy sells on that, and we would be in buy mode right now, okay? Because our higher time frame is still green. So we'd be looking to buy. Now, that being said, U.S. stock market has opened, and we do have a 4-hour support resistance level there. So we might fall down further off that. So I'm going to turn that indicator off. This one that I have on is says Orb Algo by Flux Charts is who it's by. Okay. So it does have several different settings in it. You can set this to the 15-minute, which I have it set to, on up, half hour, 45, 1 hour, whatever you want to set it to. I've got this enabled for the time, because if not, it's kind of whacked out. So I've got it enabled, and I had to set it an hour ahead. So I had to set it to 8:30 for the 9:30 a.m. Eastern Standard Time. Okay. This is the dashboard. Not really sure exactly. It's up here in the top right. You can move it wherever you want. I'm keeping it in the top right. I did notice that when you get the breakouts and whatnot, you'll get numbers pop up in here. You'll get a signal, whether it's a buy or sell. And then the back testing enabled. So what the back testing is going to do is it's going to go through and kind of back test for you, and that's what this is. Okay, so you'll see that it's got back testing of 45 days, 27 wins, 12 losses. The win rate's 69.23%. Average profit is 0.27, and total profit's 10.7, pretty much. We'll round that up. Drawing the orb zones, you can have that whatever colors you want. And then the EMA, it does use an EMA, which I don't have on there, but it is using EMA and plotting that out. And inputs on the status line is basically out to the side. Okay. So what else do we have? Oh, take profit method. Do you want dynamic or ATR? And then EMA length. That's your moving average length. And that's an exponential moving average. And the stop loss. Do you want it on risky, safer, or balanced? So what I looked at is safer to me means that I'm going to put my stop loss here. All the way across. If I get in short, if it comes through and signals a sell, I'm going to put my stop loss at the opposite order, above the high, the opposite order of the box. And that to me is a safer place to put my stop. They've got it set up as riskier. That's your riskier stop. To me, you're risking more money, but it's a safer play for your stop. Putting your stop in the middle or putting your stop just below the low or just above the low, let's say, if it breaks through here and gives you a sell, that to me is riskier. That's a riskier place to put your stop in here. They've got it set on safer. I think to them it means it's safer. You're not losing as much money, okay, if it stops you out. So those are the settings. At least that's what it looked like when I played around with it today. When I looked at the back test, when I went through and looked, the ones that got stopped out all the way across over on the opposite side were when I had this set on the riskier setup. So it's going to be up to you where you place your stop loss. We can put it on balance to see what that does. We have an adaptive stop loss on there you can enable, and I think that's pretty much it. Breakout condition, do you want the close, which would be a candle close on the other line? They also have EMA there. So I'm wondering if that is, we could pop the EMA on here. We'll plot the EMA on the chart. And I don't know, let's see here. There's your take profit levels. So it does have several take profit targets that it plops. It'll pop your stop loss on your exits. You'll see them marked. What I was looking for was the color of the EMA, but that's okay. I don't like blue, I like yellow. So we'll leave it blue. So again, we'll plot the EMA. What we'll do is we'll keep the breakout condition on the close, and then once that breakout happens, then what I want to do is we'll flip back over to EMA and see what that looks like, and see if it's truly the EMA breaking through the higher low, because basically the moving averages are lagging. Most indicators are lagging, so they follow a move. So what that means is that if we set this on the candle close, price is going to close below the low or high above the high before the moving average gets there. Okay? So what that means is earlier entry if you're getting in on the close. If you're waiting on the moving average to cross the higher low, well, then that's going to be a little later in the move. So if it does happen to break the higher low and just keep trucking, then you might miss the move. Now, something else to cover is that, and can I move this back testing? We don't really need the back testing indicator on. Where's that at? I'm going to go ahead and shut the back testing off, box off, because we don't really need that. Right now, we'll keep the dashboard open. And couple things is, one, we need to be aware of our 4-hour support resistance level. Okay. Looks like we found a good bottom here during the opening first 15 minutes as it found that low previous support in here. Okay. And we're watching on a 3-minute. We'll take these and shut these off. And we'll double click to lower the chart, take away the bottom indicator area. Okay, so we're still waiting on a breakout. So some people will get in when a candle breaks. Where is that tool? Never used it. I don't even know where it is on here. Well, there's a tool I'd like to use, and I don't know where it's at. And I don't even know if it's... in TradingView. It may not be here. I'm looking. I know it's not a pattern. I just don't see it in here. It might not be in TradingView. So what we're looking for is let me get the magnet off. All right, so some people will take the breakout when it breaks out from the high or the low, okay? And they'll take the trade. They'll take that entry when price closes on the breaking the high or low, okay? So some people will take that. And again, where do you put your stop? Okay? So let's look at that. Let's get a stop marker on here. So if it breaks through the high and you're going to get in, obviously that's a tight stop right there. Okay? The middle of the box gives you a little more room. And then the opposite side, okay, below the low, would give you a safer play. That's a bigger risk though, okay? So your risk to reward, you don't want it to be upside down. So if you do use the opposite side of the box and you get in on the entry, you could see that you've got, you know, quite a bit of distance in here for your stop, okay? So that being said, how tight do you want your stop? Okay, this is going to be a personal preference. There's no rule of thumb to this. It is a personal preference. It's up to you whether you want to use the middle of the box, you know, just below the entry, or use the opposite side. So there's 3 levels for stop placement. Right now I'm going to just kind of move these in the middle here or off to the side. We'll use them here in a little bit if we see a breakout and see an entry. So some people will wait again and take it when price closes on the either side, breaks the high or low. There's going to be other people that will take the trade when it pulls up, breaches the high, and pulls back down and tests that high that it just broke. Okay. Now sometimes it will pull down and go down even further. Okay. So you have to keep that in mind. So where are you going to put your stop? You have to decide on what kind of trader you are going to be with this strategy. So you definitely want to back test it. And what I always say is you get what you get and you don't throw a fit. So you back test it. You decide what you are going to do. Are you going to buy when it breaks the high? Are you going to sell when it breaks the low? Or are you going to buy when it pulls up, breaks the high, and then wait for it to pull back to test the high, which you could use a pending order? Okay, so you can use a buy limit. Once price breaks the high, scoots up, you put a buy limit down here and it will pull back and put you in. Okay, or you can wait for that to pull back. Okay, you know, and in that case, if that's what you do, then the opposite would be you sell when it breaks the low, and then wrong tool, sorry. You sell when it breaks the low and comes back and tests the low, and that's when you would sell. That's when you would short. And of course, you're hoping for that. Okay? You really don't want it to pull deeper. Again, you have to decide where you're going to enter. Which one of these are you going to do? Are you going to take a price break above a high low, you know, candle close? Or are you going to wait for it to break it, pull back, and test that level, and then get in? Are you going to do safety trades? Safety trade is when it breaks and closes past the lower high, okay? You put a trade on, pending order. You would go lighter with contracts, but you would put a pending order below that. You're waiting on it to pull back, and then you're going to sell and close this safety trade out, okay? So it pulls down, breaks the low, moves down. You have a pending order down here to sell. Ultimate with less contracts, let's say 2 contracts, because you're waiting on it to pull back. If it pulls back, then you're going to get in with, say, 4 or 6. Okay, so your pending trade is going to be lighter on contracts because you are getting in on an extension. But that pending trade or safety trade's on there in case it just breaks through, and instead of this pullback, it just, you know, keeps on going. Okay, you don't want it to go without you. So you would have that pending order on, okay, that safety trade. So we'll look at several different things as we get price breaking a higher low. If we get it to break a higher low, hopefully it won't stay consolidated all day. I don't want that because it's not exciting for our YouTube stream. So it looks like it's approaching the top. Now for me, I've got to do this. I've got to look at that high, okay? So we just broke through. That's going to be my high to break. So we just broke through. Let's see if we close here. We've got what? We've got 2.5 minutes. So we got time to sit here and wait. I've got this set up over here. If you look over here on the sidebar, it shows you how many seconds, how many minutes, seconds we have left before this bar closes. That's your bar countdown. So we got over 2 minutes. So will it close above? I don't know. We're going to wait and see. I'm not trying to predict what's going to happen. So far, I can tell you what's done so far. So far, it's pushed above that high, and it is tested, you know, this previous high over here. It pulled up to it. I think I had my magnet shut off when I do that line. Let's pop it to that. So are you going to jump in if this candle closes above the opening range? You know, again, that's the first 15 minutes is what we marked. So from 9:30 Eastern to 9:45, which was somewhere in here, that red candle right there was 9:45. So we'll leave our time label on. So those are our 2 candles. The start 9:30 and then 9:45. We got a lot of white lines on the chart. So we still got 51 seconds. I don't want to do that. Just want to change the color here. All right, so it's pushing up above. We'll see if it closes. Now, for me, again, got to be cautious because we have a 4-hour support and resistance level. And then I see that, you know, pre-market, before the U.S. stock market open, after non-farm, because this is our non-farm candle. So we had a bullish non-farm candle, and it went nothing but up from there, created a high here and dropped back. And then during the stock market open, we've had this whip back and forth, which is what you get on Nasdaq. And that's what a lot of people are trying to avoid. All right, so we got 3 seconds. I'm not going to pull the trigger here. I'm going to put a safety trade up here. And we're going to do 2 contracts on it, if I can get it on quick enough. So we're going to do a buy stop up there. So that is my safety trade. So I don't want to miss the move, right? After all, we've been sitting here for the last, what, a little over half an hour, about 36 minutes. I have anyways. So, but you can wait and come in to the market at basically 9:45 with this strategy. You don't have to get here at 9:30. You can get in at 9:45. But I like to get in a little early and look at what's happened before the stock market opens. So I have my safety trade. So if it breaks and runs, I am not going to miss out. Meanwhile, I'm going to wait on a pullback and see how far it pulls back and then look for a buy. It's kind of tricky in here because we got 2 levels. If you notice, the high we have for today on this opening range right here, the first 15 minutes, is right around that 4-hour level. So that's kind of tricky for me because I know that if it pulls back, if it stays nothing but above this level, well then we're golden. Okay, that 4-hour level. If it holds up, it's going to, you know, we'll see it pop up. So we really don't have a signal yet over here. Let me move my orders over. We'll move the trade orders in the middle here. Get it out of the way of the signals. We don't have a signal yet, so because that's what we're going to be watching too. We're going to be watching where this indicator actually signals, how it signals, when it signals. So I'm looking at it, you know, it's testing that 4-hour level. So we'll look to see if it rises off of that. And of course, I marked the previous high as the high to break because it had a problem getting above this price level. And that's after non-farm, guys. So non-farm payroll, big green candle, nothing but bullish, and it stopped right there. So that is a very important price to be aware of at 20,141.5, which is basically this high over here, which is our high to break that we're waiting to break. So right now we're sitting, and we have to pick a stop. Where are we going to put a stop? Again, this would be a tight stop up in here, okay? If it puts me in up here, well, then it's broken the high. So I'd be okay with putting a stop there. That would be a tight stop. Now, I am doing this on a paper account. So what I want to do is I'm going to pull a stop loss down just so we can see the numbers. So if I put my stop there, okay, let's look at the differences. And that's why I'm doing this on a paper, because I wanted to be able to show you guys the differences in the stop losses and the distance, okay? So with just 2 contracts on, we're looking at $161 if we put our stop there. That's tight. We know we might get taken out more often than someone using the middle of the box, the middle of the high-low. But if you want a tighter stop, that's where you're going. You're willing to risk 200 or 300, you're going there for 200. Down here in the middle of the box is still under 300, okay? So I'd be okay with that risk right there. Now, obviously, I'd want a 1-to-1 minimum. I'd like to get 1.5 or 2 to 1 on it. So let's look at if we put our stop underneath the box. Now, let's look at putting our stop under the box. It's about 500. I see a wick there. Do you go below the wick? 575. I think most people are going to go middle of the box to limit that and go with less risk on their trade. And I could see some people going here with the tighter stop. Just know that if you go there and it pulls back to test this 4-hour support and resistance level, you might get wicked out. I'd rather go here. Okay, so we'll leave the 3 stops in play and we'll look at what it does because we are in the trade. We're on a 3-minute time frame. We're looking at our bounces. Obviously, we have, you know, a good move up back here, move down, and then we're looking to see if that pulls on up further. And then we would look for our risk to reward ratio. So if we use our profit target tool and draw from our stop, okay, this was our entry because we were just triggered. I'm trying not to accidentally close out the trade. So you got to be careful drawing this profit target tool because you don't want to click and close your order. So there's our there is our profit target tool. We don't need to come up here and mark 1-to-1. I don't need to take the profit target tool, the take profit. I don't need to drag it up here to see what that is because see how we got 285, 280. It's already 1-to-1. I don't need to have that, and I don't want to close it all out anyways. So we're going to cancel that. But basically, we know that when we use our take profit tool, which is basically the fib extension tool modified. What was I going to do? Not that. I was going to send it to the back. We don't need to mark 1-to-1. So if you're wanting 1.5-to-1, 2 or 2-to-1, you're going up here to 3. So each level, the way it works is level 0 is your stop, level 1 is your entry, level 2 is 1-to-1 risk reward, level 3 is 2-to-1. So the best, you know, risk to reward here, or the nicest, the decent would be to have it up here at 2-to-1. Okay, some people go for 1-to-1 and close partial because that may be as far as it gets, and then some people go for 1.5. So what I want to do is come in here and we'll close out 1. So what we need to do is we're going to do a sell limit order of 1 up there. And then basically if it gets up there to that first take profit level, it's going to close out 1 for us. And then the rest we would just trail our stop. So if it gets up here to our 1-to-1 level and closes out 1 of our trades, we still have open risk by leaving our stop on the other contract. And so that right there, I have 2 contracts on. If it goes up and closes this out, then we make 280 on one not 280. We'd make 180 or 140 on 1 contract. We'd still have 140 open risk. And then, so if we let it pull all the way back here, we would basically be 0 on the day. So if it does go up and hits this level and we close out 1, we lock in 140, I'm going to want to move my stop up here. See how it's 145? So basically we'd be losing about $72, $73 against the 140. So that's our half loss. That's our half stop area. And so if it hits 1-to-1, then we move our stop on the remaining contract up, and we would lose half of that back. So still positive on the day. Okay. So right now, as we look, we're having problems breaking that. So it did break out, break through, put our pending order in. That's all it did was wick up there and put our pending order in. And that candle basically closed back below this high. So we really need this candle. I'd really like to see this candle close above this high right here. Now, the reason I'm pulling partial at 1-to-1, it may only get to 1-to-1 and then pull back down. Okay? And it may pull back down to our entry price. So one of the worst things in trading is for you to be up a couple hundred, or in this case, about 140, and then for it to pull back down and you're at break even or zero or in the negative on all your contracts. So that's why we close partial. This may get really boring fast because we're watching one contract or one instrument, and we're waiting every 3 minutes for a candle to close. So unless it just breaks and runs real quick for us, we're not really going to be doing much. The number on the right's the account margin. I had to change the which one of these are we using? I had to change this over. So here's our the realized profit. So the number on the right's the margin we're using on the account for the two contracts with where our stop is, and then so we're up 40. This is an account that I'll use to test strategies like this. If someone's asking me about a certain strategy or whatever, I'll go through and test it in their forum, give them some feedback on it, or in this case, we'll do it live here during the market. So this is a live forward test. This is not back testing. And again, you have to decide on what trader you are going to be. Are you taking that breakout like we took here? We didn't take the break and close right above the high. I didn't because of that previous high. We could have. If we would have taken that that break and close above the high, we'd been in. We'd be up more than what we are now. Probably about double. We'd been in here at this candle right here, and yeah, about double. We'd still have our stop down here. So let me mark that real quick. I'm going to mark this kind of backwards. Here's where our stop is. So let's say we took this candle right here. Okay, so we took that candle. That's the candle that broke and closed above both the 4-hour level, and it closed above the high from this morning. So from the high of the start of the market. So that entry, if we would have taken that entry, it's almost hit 1-to-1. So right there would be our 1-to-1 level. What is that? 179 right there. So I'll go ahead and mark that. We want to see how this plays out because, again, this is testing. We're testing this to see how this plays out. So getting in on the break. And, guys, it's not going to be the same every day. So that's why you have to make your decisions and kind of stick to them. Stick to them for a week or two. You know, go in the Discord group. And like I said, there's a couple guys trading this strategy. Go in there and ask them how long they forward test it. So, you know, you're going to back test. You're going to look at these moves and see how they both play out. I like looking at all scenarios. So in this case, that's what we're doing. I got in when it broke that high. So I was a little cautious, okay, because of the 4-hour, because I know that right here it hit the 4-hour, didn't break it. Here it tested the 4-hour, didn't break it. So this time it blew through it and closed above it. So didn't know if that was going to hold or not. So cautiously, I put my pending order above this high. Said I want it also to break that high before I get in. So far it panned out. We were in the positive for a while, but now we're back at break even. So here, getting in on the candle close above that high. Okay, if that's the one you took, if you're that trader that says when a candle closes above the high, I will take it. If a candle closes below the low, I will take it. Then that would be your entry. Did not quite hit 1-to-1. And these are the moves you got to pay attention to. It's not just looking at your entry and saying, okay, if I entered there, it almost hit 1-to-1. So I want to close almost at 1-to-1. You have to look at everything. You have to look at all the moves, okay? So right now it's pulled back. If we would have had our stop tight in here, again, below that 4-hour level, we'd have been stopped out right there, okay? So that one would have been stopped out. And we're still in. Now, do we look to add to our position? If you're trading prop firm, if you're trading your live accounts, you can add as much as you want to your pullbacks, your negative position. If you're trading on a prop firm account, you cannot. You can add in once. I know with most prop firms, that's a rule. Long wick. Okay, we're seeing a long wick. So does that mean it's going to turn, or is it going to keep pushing down? So we have some strong selling pressure with a little bit of bullish pressure pushing back up. So is this the time to buy in? It's pulled back to test the high. I'm going to go ahead and go in with 2 more contracts. So we'll buy 2 more. Okay, so basically, again, since it broke, pulled up, not enough to profit yet, and it pulled back, I'm looking for a bounce here. So I went ahead and added to that position. Now I've just also doubled my loss for the day. That's all I'm willing to risk on a loss for the day, is the 500 on a trade. So that's all I'm willing to put into this. That's why I only went in with 2, because I knew we were at what? We were at 285 as our potential loss on 2 contracts. So I knew by adding 2 more contracts, I was doubling that. So that was fun, right? Not really. I mean, you know, we were up for a little bit, only to see it come back. So is this your first entry? Okay. We can kind of move this over, and my order moved down. So I need to keep this where it is. Okay. So are you the one, we talked about this, I mapped that out earlier, where if it breaks above that high level and then comes back to test it, is that your entry? Okay. And that's where we're at now. We're where it pulled up and broke, went up, came back, and it's pulled back to that level. So this would be another entry model to enter on that pullback. The other is to enter after it pulls back and bounces, and you're waiting on a green candle. So you'd actually have to not do what I did, not buy in right there. You're going to buy in after you see a green candle, okay, no matter how large it is. You're going to wait until these candles close. So we got about 14 seconds on this candle. So there's your different entries. Is 1, candle closes above the high. 2, I also use this extra high as a safety and said I wanted it to close above that. That would be your second type of entry. The third type of entry is when it pulls back, you're getting in off price. You're not waiting on the green candle, signal candle is what I call it. So you're getting in solely off price pulling back to test that high of the morning. Okay, that's your third entry model. The fourth entry model is that you're waiting on that pullback, but now you want to see a green candle, form here. And that's your buy signal, that green candle. That's your signal candle. So, we've got 2.5 minutes here for this candle to close. Now, is this thing only going to go back to where it was? Is it only going to go to this high? No, we'll watch it. But those are your 4 different entry models as I would trade it. Again, candle close above the high, or below the low. You're taking it. Or you're a little cautious and you're looking at the previous high going, well, what if it only goes up to that previous high and doesn't break it? So put a pending order above. You're getting in on an extension, so expect to be in the negative for a little bit. So use less contracts if you do that. The third would be, again, waiting on price to pull back. Price pulls back to touch or test that high level. Then you're entering the trade on price when price pulls back. That's your third entry model. And fourth would be on this candle close. If this goes up and closes green, if it closes green here, bullish candle, and we got about 1:09 left. So if it goes up and closes green, that's your signal candle to buy. Those are your four different entry models. And that's what you have to decide. Which one of those are you going to trade? I'm going to leave my trade marker here because that is where I entered the first two contracts. We'll leave this one here. This is, again, if you took it when it closed above, as it's going back up to hit 1-to-1 on that level. If you notice, from the person that enters here on a candle closing above the high, we have our 1-to-1 level here. But if you look at where our 2-to-1 is, our level 3 is right at the same price as level 2. You'll start to see a lot of the times where those overlap each other if you're using the profit target tool, because basically we're using the fib tool. We're marking levels. And if you know anything about the Fibonacci tool, Fibonacci retracement and extension tool, you'll see when you use it on different moves, they typically, some of them will line up. If we look up above, we should see there's level 6. Level 6 lines up. It's not going to be all of them. So if we go back up, here's level 9. So it's every third level. So level 12 should be in line. There's level 12 here, lines up with level 8 here. So level 15 here lines up with level 10. So that's what you'll see. You'll see multiple levels lining up with each other. We still have no signal on this, so I'm not sure exactly. I haven't played around with this enough as I just put it on today to use. So I had like, I don't know, 10 minutes with the indicator, with the tool. So, but we don't have the buy on that or sell. So I would think we would have had a buy signal on this. But again, I'm not sure exactly what, I don't think it says in here anything. There's sensitivity, breakout condition. Oh, I got it set. I meant to have it on close, guys. That's why. I thought I'd change that back to close. And either way, even if we had it on the EMA breaking, we would have had it. So it says we're bullish. We have a buy price. That's my bad, guys. But I thought I changed that earlier when I reset before our trade. I thought I changed that back to close, our breakout condition. So let's put it back on the moving average. So if we put it back on the moving average, you would think it would have signaled a buy here, but we didn't get it. So why didn't we get a buy signal on the moving average cross on this thing? Because that, to me, is what it should do. Breakout condition, EMA. I would think that's when the EMA crosses right here, the opening range high, right? And we didn't get that. So I don't know. I'm not I didn't make this indicator, and I'd have to go look at the coding. I'm not even sure if this coding's open. The script is open. I don't think it is. But the breakout condition, I meant to set it back on close. I thought I did. So we did get, we do have, it says bullish. It has a buy price of 131, which is down in here, about where I bought. Yeah. So 20,131.25. Okay. All right, right there. So this would be our buy according to this. We'll put buy in there. We'll move it over to the left, center. We want to put it on the left. Yeah, we'll put it on the left. All right. So that's about where I added the other two. Okay. So it pulled back, gave you a buy at 20,131.25. And it has the stop at, look at that, would you look at that, 20,079. If you look at where my stop is, 20,080. Okay, so the stop would be a little bit lower, or 79 even. So right there, it'd be a little lower. So risking, in my case, 486 because of where I got in. So it'd be a little less than that. If you would have entered, say, here with 4, it would be less than that. You'd still be under 500 on the trade. So it does show you or project where your stop loss should be and where your entry is. I thought it also marked the entries. I know it marks the take profits, or did on the, if you look at the back testing area. Let me turn the back testing on. I wonder if that's why we're not getting this stuff to print. No, that's my buy I put. Yeah, I'm not sure, guys. You know, it looks like when I move this tool, sorry, I need to move this back to where my limit order matches. There we go. Because remember, I had this sell limit up here, and when I moved the tool out here, evidently I moved it and I had it up like this. So I had it up too high because my 1-to-1 is off my limit order. So that would have been where I entered the 2 contracts. So far, nothing great. We were up a couple hundred. The person that entered here, so the person that did enter long on the close above the opening range break, okay, above the opening range here, high, the person that entered on that did hit 1-to-1 right here, okay. So they've hit 1-to-1, so they might have closed out partial. That's going to be up to you guys. It's all up to you on when you're going to enter, how you're going to enter, where you're going to place your stop loss, where you're going to close partial. Is it going to be 1-to-1, 1.5-to-1, 2-to-1, and how you're going to manage your stop loss? Those are all decisions you have to make. And as we know, entering here or entering when I did, if you had your stop here tight, right? And see, to me, that's a riskier. But according to the indicator, the way it's set up, it looks like that says it's a safer. If you look back at the back testing, the safer stops are up here. And then it has a, what did it call it? So your stop placement has safer, balanced, and risky. And if you put it on balanced, the stop's in the middle. See how our stop is right here? Let's change that and see what it does. I want to see what it does to this stop right here. If I change this to safer, see how it changes the stop? 20,102. 20,102 would be where? Up in here. So 20,102 would be, I guess I could go type in the price right around there. All right, so that's 20,102. That would have been, you know, buying here, okay? because that's the price that has you buy in. And it has it, we would buy in on that or buy in on the break. I'm not sure which one because we don't. Oh, here it is, guys. It's right in my face. So there's our buy signal. So there was your buy signal off this strategy. It looks like you have to have the back testing on. We didn't have the back testing on. I don't know. I'm going to take the back testing off and see if it still stays. But there's our buy signal. So the buy signal actually came here, okay, which is taking that break. It's basically the close of this candle, the open of that. So it looks like the buy signal on this setup that I have now is signaling when price breaks the high. The stop placement, if we look at the stop right here, 20,102, okay, right there, that line. If you look across to the left, it looks like it's using this candle low. Okay, it's using the candle low. So again, that is on the okay, that is our stop on safer. To me, that's not a safer place to put your stop. That's riskier because you could be taken out quicker. So again, what I think they mean by that when they say safer, it's less of a loss, less of a potential loss, is why they're calling that safer. So to me, that's kind of backwards, but that's okay. So stop loss is safer. It's up higher. If we go stop loss riskier, okay, it changed it to 20,056. So where's that? Should be down here somewhere. Oh, it's in here. It's still in the box. So right around there. Need to get the tool here. So a little bit below that. So there's your, they're calling it a riskier stop. And again, I believe it's because you're risking more money. And that's why they're calling it a riskier stop. So to me, I consider that a safer play on the stop because it is, gives it more. All right, sorry about that. I had to let the doggy out. All right, so again, that's your different stop levels as they have it set up here on the indicator. All right, so again, the buy did come on that break. So let's go back into the indicator settings and mess around while we're here. So again, if it's your safer stop, then it puts the stop at 20,102, which is here, which is less of a loss. Okay. If it's your balanced stop, 20,079, which is where my stop is, so middle of the box. And then for the what they're risky setting, where you're risking more money, then it's down here. So it's not on the opposite side of the box. It would actually be up here would be your other stop. Okay. So there would be your 3 stop levels, okay, that are marked there. Yes, we're going to mark these in red. And my stop, I can just kind of leave where it is. So we're not going to mark it. Or I guess we could. Talk me into it. It might not let me drop it there because my stop order is right there. There we go. All right, so right now we're getting that bounce again. We had the high to break over here marked, even though it breached it briefly here and tested. It turned and tested this level. That's where I bought 2 more. So again, I went in waiting on it to break this high. So I didn't get into over here. And then so I bought in with 2 more on that pullback. So far nothing extravagant. If you would have got in on the indicator buy signal, then you would have hit 1-to-1. If you're the person that closes out at 1-to-1 partial, then you would have closed. So let me look back at, I want to turn the back testing back off. So I don't know why that wasn't. I think it's all because of the EMA. Yeah. See, setting it on the EMA, the breakout condition on the EMA, we had an EMA break there, but we had no, this thing did not signal a buy. So evidently that doesn't work. If you guys find out it does, let me know. Because to me, the EMA setting doesn't work. If I have this on EMA condition of a breakout, then when the EMA broke through that high, we should have got a signal to buy, and there isn't one. So using the close, we did get the buy back here. So I'm not sure why the EMA doesn't show the buy in there. It's nice they have it on there, but what are we showing over here? It looks like it doesn't work. So this is kind of flipping back and forth. It's showing you your current profit off getting in on that price. It flipped to red a little bit because we were in the negative. I'm already in the negative. But what they're showing you there, which is, this is kind of cool, guys, that it shows you your profit based on that entry. So even if you're not in the trade, if you did not take the buy here and get in when this thing signaled buy, you could still watch it. It's still going to show you how much you're in profit right now. And then, of course, it went red. These both turned red here a little bit ago. I mean, it's showing that when it dipped here, it was actually below the entry price. So it was in the negative some. So I do like that this signal shows that. So I think if I was using this indicator, I would leave that dashboard setting on. And, of course, you're looking at your stops. Where would you put your stop? So again, riskier means you're going to have more open risk. You're going to have a bigger stop loss. Balanced would be that stop loss in the middle, right between the high-low. And then the safer bet on your stop loss would be there, okay? And that's going to be less of a stop or less of a potential risk. So let's say I got in with the 4 where I'm at now. It doesn't matter. So let's say I use the first stop area. If I use the first stop area, I'd be risking 308. Using the second stop area, 480. Third stop area, 668. I'm only willing to lose 500 on a trade. So that would be my stop for me, middle of the box. And then, of course, we did hit 1-to-1. So if you're closing out partial, you would have closed out part of that trade. Let's look at take profit. They do have take profit settings in here. I know over here in the style, you can see take profit, above bar and take profit. I'm not sure exactly what all this is based on. Because I haven't seen it play out yet. Okay, here's your stop losses, and there's your exits. So these mark when take profit levels are hit, your stop levels are hit, and it tells you when to exit. The inputs on that, here's your take profit method. They have you using, you can use ATR, or you can use a dynamic setting on that. And that's for your your take profit levels. And that's up to you, whether you want to put it on ATR or dynamic. We don't have it hitting any levels yet. Let me put it on ATR and see if that, yeah. So see, ATR already marked that. So here's your ATR take profit method, okay? So ATR take profit method, we would have, getting in there on that candle, break above that high, you would have closed out up here, take profit, close partial. And then your stop loss would have been hit here. And I'm not sure why that is, because the stop loss level's right here. So it wouldn't have actually stopped you out. You'd still be in the trade if you closed out partial. I do like that it has these multi-level take profits in here. So it does show you the levels. And let's see, we have the first one is at 20,158. That's kind of small. It's right there. So that would be a take profit level. I'm going to color these green, and we're going to make these a solid line. So that would be your first take profit level. So there would be your entry, your first take profit level, which your stop, let's look at that, because if I have my stop here, right? That's where the stop is, the recommended stop. Did we hit? That's 2 to 1, or no, that is 1 to 1. Okay, so the first take profit level looks like it's at 1 to 1 because it would have been here. This is the price that this thing says to close at. Okay, and if you look at that price, that green line, it comes over here, level 2, which is 1 to 1. Based on your stop being here, what was recommended, and your entry being there. Okay, so it looks like it's a 1 to 1 on our first take profit level. Let's look at take profit 2. Take profit 2, 20,185. It's a little bit above here. So right there. So what I'm doing is I'm looking at our profit target tool over here that I drew here, again from our entry price to our stop price, and it looks like they got stopped out here. So I'm not sure why, because the stop was recommended here on that mid setting. The entry is actually right there. So again, it looks like they're using a on this ATR setting, we're looking at 1 to 1 for the first take profit area, second take profit area, 2 to 1. So we look at the third, it's 20,212.50, 20,212.25 is our profit target tool. So I'm just going to use that. And 20,131.25, that's a little different. So this 20,131.25, that is off of this number. Let's see. 20,131. It's quite a bit off. And it's 25. I know I'm on 75. So that's a little off, further off, and I'm not sure why. But so they do. Oh, that's the stop. Why is it the stop loss? Sorry. I'm looking at the wrong thing, guys. That's where our stop loss is, which is up from ours. I'm not going to move my stop up, but it looks like they're moving. I wonder if they're moving the stop up. So 131 would be up in here. So I'm not sure how these are going to hold with this, because right now, according to this thing, it's saying you were stopped out, which we weren't. So that I'd have to look at the code and figure out why that showed like that. But I do like that it gives you multiple take profit levels. So it's going to evidently tell you when to take profit. It's not going to close out a trade for you. So this is part of looking at the back testing. If you go back and look at previous dates, you're going to see how it broke out. And that's why I said, guys, you got to look at this and test. I don't like the way it looks back here. It looks great as we have the 9:30 to 9:45 in here. And I like to include the first 15 minutes because as you look, we get candles that close. This was around, that was around 10 o'clock. It came down to test that bottom and then test it again before moving on. So it broke, pulled back to test the high it broke, and then moved up. So that would have been a good trade. Is it long term? No. Did it trend for the rest of the day? No. It stopped at what? Noon? Stopped at that 11:30 time, 11:30, which is where between 11 and noon you decide we don't take new trades, so you got to move your stops and adjust accordingly. And but it actually gave a stop loss here, so it actually gave you a buyback in here. So see how it this second breakout that it pulled back and that red candle, it's telling you to buy. It's going off a price. It pulled back and tested that level and said buy. We didn't get the same thing over here, and I don't know why. This candle closed above, that red candle pulled back to the high. Not sure why, only because maybe it's because that red candle closed below the high is my guess. Where over here, this red candle closed above the high. Okay, it closed above that high. And so that's why I'm thinking it gave the buy signal there. Let's go back and look at another day. So here again, are you the trader that trades the breakout of a high low? If you are, you would have taken this right here. You would have taken that short, right? If you're the type of trader that says, hey, if it closes on the other side of a higher low, I'm going to buy, sell, then you would have taken that. If you say, I want to wait for it to pull back to the line, then you would have taken that when price pulled back to the line. If you're waiting on a bounce off the line, you didn't get it. And a red candle for a bullish signal candle, you didn't get it. You're okay. You did not take this loss. Okay. It over here, it breaks above, pulls back, and it actually gave you a buy. So I don't know what the difference is because, guys, if you look, or is this not time-wise? Nope. See, that's still right here is almost 10 o'clock. So what's the difference in this break? One candle closed below, next candle's red. You look over here, one candle closed above, next candle's green. It is identical. That is exactly identical, okay, to me. So what makes you buy on this one right here that you didn't sell on that one? Not sure. To me, that's I don't know, slop, and I don't know why. So here it gave a good buy. So this is one where I like this. It broke above the high, pulled back, and gave you a buy on a green bullish signal candle. Okay with that one. That one looks pretty. But that's what you want to do. Kind of come back and look at these. Candle closed above the high. If you're the type of trader that takes the break, you would have taken that. If you wait for a pullback, you would have taken it there. If you're waiting on a break, pullback, and a green signal candle, you don't take that trade. You don't take a loss. Same over here. Break. If you're a type of trader that takes a break, you took a loss. If you wait for a pullback and you get in on pullback price, you took a loss. Depending on where your stop is. If your stop is halfway in the box, you might have stayed in. But if you wait for it to break, pull back, and then a green signal candle, then a red signal candle, then you don't take a trade. Here's same thing. Breaks and closes on the other side of the underside of the low, and then pulls back to test it. It pulls back through. We don't get a red signal candle. Over here, the third time it punched through, so the third time it popped through, red candle, pull back on a green candle to test. Red candle here would be your signal candle. If I'm going short, I like to get on red candles. If I'm going long, I like to get in on green candles. So to me, that's my best setup, is to wait. Look at this one right here. Again, break. Do you take a buy? It gives you a buy on this third candle. So it broke, you entered, you got stopped out, even if you had your stop way over here on the other side. So regardless of where you had your stop, you got stopped out, only for it to keep moving. It pulled back. If you're taking a pullback and getting in, well, then you're getting in a little riskier trade. Should be less contracts. So if you take a trade when it breaks and closes on one side of the box, that's a riskier trade, getting in on that entry, because it hasn't tested that price. So go in lighter on contracts. Okay. If you're getting in on a pullback, price action pullback, and you don't want to wait for a signal candle, again, you're getting in on a riskier trade, less contracts. Then you wait on a buy candle. You don't get it. Those people aren't in. You're sitting out. And it does that a few times. It does that several times where it does it through here. Ultimately, it breaks in here. And then to me, the extra caution in this one would be it didn't break this. It didn't go above this price level here. Didn't even touch it here. So if I get in on this, I'm waiting for this level to be broke. That's my extra caution. Okay. And that would have been your move to get in on. Let's go back and see where we're at. So we're up 44 now. We were up a little bit more. Nothing exciting. Again, we did hit... oh gosh, I don't want to delete that one, guys. Sorry. I want to delete that line out. So we did almost hit 1-to-1 here based on this indicator. Based on this drawing. Or sorry, 2-to-1 on this one. So I do like this indicator, the way it's set up. I like that it has your take profit levels. They sync up with ours pretty much with this take profit tool. So depending on where you put your stop loss, those levels will change. So again, if we take our stop loss and put it on the balanced, it's going to be in the middle of the chart, which is right where my order is. So if we move that down, if we would have had our stop loss like that at the balance level, which is midway on the box, which it should give us that price, 20,131. Nope, I'm at a different price. So 20,131 is up a little bit. Oh, it's up quite a bit. I thought I put that on balance, guys. It's up here. It's showing that as the balance setting, and I'm not sure why. I thought when we measured that out, it was different. But what I'm getting at is your profit target. Your take profit level should come close to what we have in here. We have 20,154. It's got 20,158, 20,185, 20,180. So you should see those kind of line up. And that's if I got the entry price right. And the stop is 1031. Oh, that's what it is. It's moving the stop on us, guys. That's why. So nothing exciting today on the ORB strategy. You're going to get days where it's going to be like this. You're going to get days where it's going to be over quickly. and you're going to profit, you're going to get days where it's going to be over quickly and you take a loss. And you have to decide, if you take that loss, are you going to get back in if it breaks again? I can't answer that for you. That's up to you. Everybody's going to have their own preference on that. If you take that first loss, do you get back in again? Need to go out and check the Forex trades. Got one on. Went long on the euro earlier today. So doing two things here. I'm, of course, I bought with 40 lots. Just move my stop loss, and then going to close out 3/4 of the trade. And I'll post this out in the Discord. This is really nice one today. All right, so all we're getting so far is it's pushed back up toward that high. Again, we're just going to wait it out and see. You guys can use multiple things for a stop level tool. One of them I like to use is this right here. However, you have to adjust it to our buy and sell indicator, and that's the power trade indicator. So this right here being on, it would have been adjusted this morning. And I start at a 1.5, and then what we typically will do is adjust it to match the power trade indicator buy and sell signals. Okay, so if I'm matching it today on the breakout, we have a buy signal here on the ORB strategy breakout, basically when it broke the high. So that's our buy signal. So we want to have our stop level tool, and it's not, don't confuse it with the moving average. That's why I wanted to change that off blue. So the stop level tool is here, where it gives you these little plateaus to place your stop up under, and I don't ever move it right to that plateau area. I want to move my stop tool, 2 levels back. So there's one plateau, there's 2 plateaus. We'd move our stop 2 levels back and give it a little bit of room. All right. Up and down, positive, negative, more positive, back in the negative. All right. So while we're sitting here not doing much on this, you know, that euro trade locked in pretty much a month's worth of profit. So let's go back to what I talked about when we just went back and looked at a few previous days. So today, getting in when price broke the high and it said to buy, you're okay, right? You may or may not have closed partial. You probably would have if it came up close to here, you're 2-1 or you're 1-1. So good trade overall. I'm in the positive, so still happy with that. But as we went back and looked over a few days, we also saw where price had broke a high, okay? And then on the next candle pulled back and then went all the way down through the different stop loss areas, okay? That could have happened today. So what I would say with this is do not switch back and forth, okay? Back test it. Definitely back test it. Forward test it. You know, back test it. Look at what it's done in the past. Decide on if you're going to take it when it breaks a high or low. Or do you wait for it to pull back to test the high or low? If you do you wait for a green signal candle, in this case, to buy, red signal candle to sell? Okay? Which entry are you going to do? Decide on that. Then forward test it. Do it for a month. Don't just do it for a week. That's not enough data. Okay? Do it for at least a month. And then if you decide, if you say, okay, I'm going to take it every time it breaks and closes above a high or breaks and closes below a low, that's my entry. Do that for a month. Every day. One instrument. Nasdaq, ES, whatever it is. Do that every day. And at the end of the month, look back at your data. Look back and see how many wins, how many losses do you have, okay? What's your success rate? And then if you need to tweak that, obviously if you have more losses than wins, then getting in when it breaks and closes above a high or breaks and closes below a low is not the way to go. If you do that for a month and you have more losses than gains, well then that's not the way to do it, okay? Do you wait for it just to pull back, just for price to pull back that line? Do you get in on that? Try that for the next month and see. Do you wait for a bullish candle? Try that for a month and see. Now, me, if I go back and back test, I don't need to go try this for a month. I can go back and come back and look at the days. I just come back and look. Well, if I would have taken this when it broke and closed like we did today, or like I did, and I waited for it to break out of their high. But if we would have taken the break and close of this low, boom, negative trade. It blew through all the stop levels, okay? The safer one, the mid-level, the riskier one, the more risk. It blew through all. Loss, okay? So that's me back testing it. I don't need to go forward test that on this particular day. I know that it didn't work. Okay. Here, it broke the high and closed above. Again, taking that, yes, that worked if you would have taken a break and close above. But if you would have taken this break and close above the high, then you would have taken that break and close below the low. There's no difference. That's still, this is almost 10 o'clock. It's outside of the 545 range, 530 to 545, the first 15 minutes. You would have taken that. So you can't look back and back test and say, oh, well, I would have taken this. I would have certainly taken that long because, look, it worked out. It's easy to do that. It's easy to say, well, yeah, I would have taken that. I would have got all that profit. Okay, and maybe closed when it crossed the moving average. Boom, there you go. Good trade. But if you say you would have taken that break and close above that high, then you're also saying you would have taken the break and close below the low. So you have to be honest with yourself when back testing. Don't miss anything. Don't sit there and say, well, there's my trade, because you're looking at this. You're looking at the profit. Because you have to say, if I take the break and close above the high, I also am taking the break and close below the low. That would have been a losing trade. So you would have had a loss and then a gain. One losing trade, one winning trade. They would have balanced out, more than likely. Okay? So you have to be honest with yourself when you go back and back test. Go look at it. Here, same thing. Close below the low. That would have been a loss. Closed above the high, depending on where your stop is, because this pullback here blew through all the stops. If you took another chance here and got in when it closed above the high, that would have been a winning trade based on where your stop loss was. Now, they've got a tight stop loss in here. They've got where it hit take profit. You probably moved your stop to break even, and then it came down and stopped you out. Again, I'm kind of guessing on that because I haven't seen it in action. Same here. Now, this one a little different. Break above the high. Again, are you getting in on that? If you did, stop loss is okay. If you probably placed it in any three levels because it should have been below this wick. And then when it moved up to take profit levels, you'd move your stop along the way. They have a stop here when it looks like when the candle wicks back down to the moving average. So your entry on this one was here on this candle. It's where they're showing. And then you're stopped out when it pulls back and closes, or pulls back and hits the moving average line. It looks like. Again, I haven't done that much looking back on it. Same here. This one would have been okay on a break. Again, we covered this one where do you wait on it to pull back and get in, or do you wait on it to pull back and then a red candle? So this would have been your safer entry, right? So getting in on the break and close below, you had to have your stop mid-level back or even further. You'd have stayed in. If you went with the tighter stop, you stopped out. So do you wait for it to pull back and then give you that red candle in this case for a short, our red signal candle? If that's the case, you don't get an entry here, you don't get an entry here, you do get an entry here. It breaks and closes below the low, pulls back, and then your red signal candle. That would have been your entry. Where's your stop? If you use the current high right here, tight stop. That would have been a great entry. Enter there, tight stop. Even if you went midway back, it pays out. Okay, so that's what you got to do when you pull back and look at these levels here. Pull back, close below the low, pulls back up, and it breaks back through that low. It's no trade. Okay, here pulls back, breaks above the high, pulls back down below the high, no trade. Because what you're looking for is a bounce. You're looking for a break, close above, pull back, bounce, green candle. Same here. We don't really get it. We get it breaking, but then pulls back through. We get it breaking, and then it pulls back down. We don't get a pullback down and then a green candle. That's what we're looking for. Over here it breaks. You get a pullback ever so slightly. If I didn't have this over here, it would probably look a lot better. So again, breaks, pulls back to test that, and then green candle. That would have been a safer entry. If you look at that entry stop loss, current low, would have been a great small risk to put up for what was gained on that trade. So that's how you need to look back when you're back testing, 100%. So we're moving back into positive. I think I'm going to be not done with this, but we've right now where it's gone, it's really not wanting to jump and run to up here. And I didn't change this. I should have. When I put on 2 more contracts and got up to 4, I should have changed this order to 3, to close out 3. So, or 2, either or. So I'm going to go ahead and manually close out 2 of my trade, I think. Let's close out 3. I'm going to go ahead and close out 3 because it's back up around that high, may not break it. So it was about 258. So we got about 200 locked in there. And there it goes up and hits. So I would definitely close out partial now, like I did, because there's no way of knowing if it's going to get all the way up here. So I have 1 on, and I don't want to close the whole trade, so I need to close that off. And I think I have another order. No, we don't. All right. So that was a good trade. 200 on the day, not the greatest, because I risked more than that on the whole trade. So I risked about 500 on it. So definitely hoping that this runner goes up and gets me about another 300 to cover that whole initial risk we put up. So what I want to do is I'll move my stop up to this stop level right here. This was one of the stop levels on the indicator when we changed the risk tolerance on there, on the setting on there. All right, so we'll move the stop there, not quite to break even. We'll lose back $20 out of the 200, which is 180 on the day trading this. So it's still a decent day, as most people look for. On average, about 200 is what I like for most people look at for the day as their target. The reason why is because most people make anywhere from 150 to 200. Most working class. I know in construction, and I know I go back and do a lot of my comparison to the guys working construction. But guys today working construction, if they're making $20 an hour, which is the average around here, 8-hour day, they're making 160 per day. So 200 for the day is a realistic target for them, because 200 a day, if they can do that consistently, takes over their paycheck. It's more than they're making going out and working 8 hours. And we haven't even worked 8 hours. Okay. So I got in here at 9:30 and started looking, and it is not even 11:30. It's almost 11:30 now. So 2 hours. So 2 hours, I made the same or more than the construction guys are going out and making in an 8-hour day today. Okay. So that's sustainable. That's a nice target for someone to use to say, okay, if I can make $200 a day consistently, then I could potentially quit my job. That's all I need, 200 a day. 200 a day, 20 training days is $4,000 a month. So again, how much are you making per day? Or how much do you want to make per day? I always tell people to start. I always recommend starting out with how much you make per day currently. Because in order to get to where I get to how much I want to make per day, all I have to do is increase the contract size. We trade the same trade every day. So this was an okay trade. This was the first time I've used this indicator. I like it. You have to just decide. Again, this one actually signaled the buy signal right here, which was again, that buy signal was when this candle broke above the, let me remove this one, which is where this green candle right here broke above the top, which is the green right here, that top line, which is our high from this morning between 9:30 and 9:45, that first 15 minutes of the U.S. stock market. So again, candle broke and closed above it. That's the entry that it gave. Now, I waited for it to break this high as further confirmation that it was going to go somewhere, okay? And it just kind of played around sideways for a while. We even had a pendant form pretty much as we had a lower high, a high in here, and then we got a lower high, and then we had our low here. We had a higher low. So we're making higher lows, lower highs. That's where you get that pendant or flag formation. It finally broke out of that over here, and that's what we're getting a move on, the continuation move. So stops at a decent place, and we may get stopped out. We're okay with that. That still gives us 180 on the day, which again is more than some people go out and work 8 hours for. And it's only been 2 hours. So happy on that. I'll probably do some more on this. I got to tend to my regular trades as well. So that's why I'm still, traded today in the Forex account because I need to still make money on the day. So this is demo in here as I'm showing this and able to pull this down to show you the stop distance and how much we have at risk. So you'll see me do some of that when we do this type of trade. But just know that I have to get in the morning and put some trades on for myself. So, and those are going to be in the Forex market because that's the market I know better in futures, and we tend to get better moves in the currency pairs than we do in futures anyways. So anyways, I'm going to kill the recording. Hope you enjoyed this. Again, this tool is ORB Algo. It's by Flux Charts. Okay. And I like the way this is set up right now with that, the take profit levels on here. It has your stop level. Either way you have it set up, if you have it set up to dynamic here, it doesn't have the take profit levels, but it does have the stop. Okay. So if you use the ATR setting, it does have 3 take profit levels. I like that. It should force you to close profit. You need to have targets. I don't like closing out all my trade because if it's going to trend for the rest of the day, I like to have a runner on that can capture that profit. So that's the target. Again, I had to set this up instead of 9:30 because it's 9:30 a.m. Eastern to 9:45 a.m. Eastern. On this indicator, I had to change it to 8:30 to 8:45 in order to get it to line up with the 9:30 time frame here to the 9:45 time frame. All right. So I hope you enjoyed. It is a strategy, and it's just one you got to play with to get your figure out if it works for you. So it does work, and guys, you just have to play around with it. Do you use it on Nasdaq? Do you use it on ES? Are you going to use it on Dow, Russell? It is on this particular time we're looking at today. We're looking at the first 15 minutes of the U.S. stock market. So I would look to trade an indice or a stock. Okay, one of the two. One of the indices, one of the stocks. That's what I would do my analysis on. Okay. You can always look at other things like gold and oil and all that, but you're looking at the U.S. stock market. So the things we like to trade during the U.S. stock market are the indices and the stocks. Okay. That's what's being traded actively more than the other instruments. So that's what I would look to use this on. So hope you enjoyed, and I will see you on the flip side.